People talk a lot about why stablecoin matters and much less about how to be ready for them. So, here is what you should ask when starting a stablecoins project. The first thing to note is this: stablecoins are not intended to replace cards, instant payments, or any traditional link system. They are complementary. So, as a bank, you have to think, how do I balance stablecoins with my other offerings? That means stop asking if you should issue a coin and start questioning yourself so that when stablecoins are the best tool, you can use them. For that, you must first determine how they fit within your current architecture. Existing payment system must connect within the blockchain networks, support tokenization, and manage smart contract-based settlements. Interoperating with legacy infrastructure will be a challenge, so you need to think about that too. Reconciliation, liquidity management, compliance, and risk framework all required to redesign to accommodate the speed and transparency of the digital tokens. And all of this demands capital and talent. So you need a people who understand both blockchain and existing payment stack. Do you have the resource? The genuine readiness then spans across 4 interconnected dimensions, starting from technology, operations, people, and regulation. Technologically, you must upgrade your systems for blockchain compatibility, security, and scalability. Operationally, you need to redesign entire process across compliance, settlement, and reconciliation. People dimension involves developing or acquiring the talent fluent in both financial regulation as well as in the distributed ledger technology. While regulatory and risk readiness requires robust governance that align with your emerging global standards. Beyond these, you have to consider the pricing models, liquidity structures, and treasury implications. Stablecoins will reshape liquidity, capital, and balance sheet behavior across your entire organization. So, the future will likely be a hybrid world where distributed ledgers, stablecoins, and your traditional payment systems gonna coexist and complement one another. You can run stablecoin pilots or a small proof of concept test, but integrating them into your regulatory banking core is another matter entirely. Of course, they do matter in areas like interoperability, where the ability of one payment system communicate with another seamlessly. So stablecoins also raise important possibilities for financial inclusion, since in countries without established payments rail, they could give people access to digital finance for the first time. But there's some time to go. So the question to ask are, how do you integrate stablecoins into your operational payment framework? How do it fit within your payment platform, the kind of infrastructure that connects different rails and systems? And are stablecoins really central to what matters most in the payment modernization? Alright, that's it for this video. If you want to learn more, check out the article below and don't forget to subscribe to Commerce Labs newsletter.